Hello, good morning from a rather glorious Wednesday the 5th. I'm FX Blue and this is the Market Brief. So as the UK recovery continues, there are growing concerns that the old furlough scheme may be withdrawn before the economy is fully back on its feet. The scheme has been extended twice now and is currently due to end in September, but whether that will be enough, well, that's still up for debate. That said though, businesses will have about 3 months to get going again, so frankly if they can't generate enough cash flow to cover staff costs by then, perhaps there are wider questions over their underlying commercial viability. Either way though, concerns remain about a surge in unemployment going into Q4 later this year. As such, the MPC meeting this week will surely see further discussion of negative rates in the autumn. They've assured us of 6 months warning of any move to negative rates. But ahead of tomorrow's meeting, sterling was driven a bit lower by the dollar. We fell to 138.40 yesterday. We have recovered to around the 139 mark this morning, but the trading range is narrowing as the market is a little unclear about how sterling may hold up against the dollar's inevitable recovery whenever that begins in earnest. Over in the US, the concerns there are focused more on inflation than unemployment. Powell continues to assure the market that the Fed does have a plan, but the market is not used to being patient and naturally begins to speculate a little, especially when San Francisco Fed President predicted GDP growth of 6.5% this year. It's widely understood that they can't expect that kind of growth without inflation, but the question remains over how high the Fed will let inflation run before taking action. Indeed, many analysts have set an informal demand that the Fed should inform markets of its intentions when core inflation breaks the 2% level. But do they call the shots? Guess we'll see about that when core inflation creeps higher. Yellen was on. She suggested that the US would be in a low interest rate environment for some time to come. And that's as the dollar index might be forming a bit of a base. Yesterday it saw 91.40 tested as euro dollar tried to break below 120, but we recovered to close around 120.15. We've already seen another challenge to the 120 level this morning, so who knows? Keep an eye out. Today may be the day that we break back into the 119s. Right, well that's it from me. Have a wonderful day. Try and get a little break out in the sunshine at some point. It's worth it, I assure you. And do join me again tomorrow.
If you do not have a clue, then just tweet through and ask FX Blue.